Hello there. It's been a tough month for a general stock market, which is down 6%. At around the same time, Bitcoin is mostly sideways. Gold has shot up recently, but over the last few days, it's sort of correcting at the moment. Energy is doing the same thing. It's in a bit of a correction at the moment. So I just want to take this opportunity to have a quick review, very brief review of a range of markets. And we're going to start with Bitcoin. I actually haven't looked at cryptocurrencies together with you guys on YouTube for quite a while. And what's happening here is that the current cycle in Bitcoin is 35 days long for now. Generally, historically, these cycles in Bitcoin last for around a couple of months. So based on the average duration for these cycles, I still do expect a bit of a softness in Bitcoin for perhaps 1 or 2 or even 3 weeks. Purely technically, we saw some poking below the Bollinger Bands, but the Bollinger Bands weren't very wide yet, so the price was rejected from the 50-day moving average, which will probably give us another low sometime in the next couple of weeks, which will be that cycle low with a bit of a buying opportunity closer to that 200-day moving average. Looking at market sentiment for Bitcoin, we see that it's quite volatile, the blue line at the lower part of the chart. So for that reason, I also like to look at the 10-day moving average of this Bitcoin optics, which is the solid green line at the lower part of this chart. And as you see, every cycle low for Bitcoin does come with this 10-day moving average of the Bitcoin optics, somewhere below the level of 40. Over the last couple of days, this green line, this 10-day moving average of the Bitcoin optics has dropped just below 40. We are now at 36. But as I mentioned, I do expect a little more softness from Bitcoin in the shorter term, just based on the average duration of these Bitcoin cycles. Next, moving on to the general stock market, S&P 500 in front of you. A few days ago, we've seen the end of this second daily cycle of this ongoing intermediate cycle. We've seen a bit of a bounce since then over the last several days. In fact, at myfinanceteacher.org, we were expecting a bit of a bounce into that third daily cycle, which would be only a temporary relief rally, as we're clearly going to decline down into the intermediate cycle low at the end of this third daily cycle. So a likely scenario in the short term is perhaps another few days higher, maybe a fake poke above the 50-day moving average, rejection from that, and a continuation down into that intermediate cycle low, again much closer to the 200-day moving average. After all, at the moment, the stock market is quite a bit stretched above that longer-term 200-day moving average. Looking at the optics for the general stock market, we see that mostly, not every time, but mostly these intermediate cycle lows, which by the way last for around a half a year, do like to be accompanied by this optics anywhere below the level of 50, very often pretty close to the level of 40, and even sometimes quite a bit below that. Recently, optics bounced from under 50, currently we are at 56. Again, I do expect a continuation down relatively soon, down into that slightly severe intermediate cycle low, bring us back down towards the 200-day moving average. Next, let's look at iron ore. The last time we looked at iron ore was all the way back in late March, and back then we were expecting a continuation of a correction down for a while before the bounce into that next cycle. At that time, we were expecting one of these two scenarios, either the green or the red one. That turned out to be pretty close to how the price actually evolved. We're now back at the 200-day moving average. And while this ongoing cycle is only 24 days long, usually these cycles last for nearly 4 months on iron ore. So despite this cycle being relatively young, to be honest, I don't really expect iron ore to perform extremely well. Not with the US stock market going down into its intermediate cycle low. And to be honest, the fundamentals in the Chinese market don't look extremely healthy either. Luckily, as I show in the model portfolio for the members at myfinanceteacher.org, I was buying a few of those largest iron ore producers somewhere around that first low, which after a bit of a further dip turned out to be a relatively acceptable trade perhaps, although iron ore producers haven't really performed extremely well versus iron ore itself. Here's the ratio of producers to ore, you see it's mostly sideways, which by the way also means that producers aren't overvalued. Next, moving on to crude oil. A very interesting news with crude oil back in late March was that crude oil was breaking out of this relatively long-term downtrend that has been respected all the way since early 2022. More recently, we see a bit of a correction down to retest that breakout. Usually, purely based on the chart technicals, somewhat less experienced investors would see a retest, a successful bounce from that, expecting a continuation of the trend higher. We, however, as you know, do like to look at the cycles, and we are getting long over here, and this recent correction down from 86 down to about $80 doesn't look severe enough for a normal crude oil cycle low. So perhaps a bit of a bounce from this 50-day moving average as well as from this long-term downtrend, break below that downtrend, break below the 50-day moving average to give us the regular cycle low. Cycles, by the way, usually last for over 5 months on crude oil. And that upcoming cycle low, perhaps again in another couple of weeks, would be your buying opportunity in energy. Lastly, and perhaps most excitingly, let's have a quick look at gold. Looks like gold has finished the daily cycle, the first of this ongoing intermediate cycle. These daily cycles usually last for nearly a couple of months, on average slightly less than that. For that cycle low, I would like to place this arrow here. Within the intermediate cycles though, we do see a few daily cycles. So in the short term, I do expect a bit of a bounce higher in gold, perhaps a poke above the Bollinger Bands before we drop down into the end of the second daily cycle. So there is a pretty good chance that gold has already topped for this ongoing intermediate cycle just within the rally into the first daily cycle. Maybe a bit of a repeated high, whether it's going to be a higher high or not remains to be seen before the correction down into that intermediate cycle low. After all, if you look at market sentiment for gold, optics is pretty high. It recently reached 73. That's pretty close to this red line. There is a chance that the intermediate cycle has topped. Although there is also, say, a nearly 50-50 chance of a higher high again before a correction down into that intermediate cycle low. If you're still holding a bit too much cash, that intermediate cycle low would be a nice buying opportunity for scoop up some of those underperforming miners. Remember, miners are underperforming lately versus the gold price itself. Eventually that will reverse and you want to position yourself properly for that eventuality. Talking about miners, back at myfinancesteacher.org, we do regularly look at fundamental value for a range of relatively large gold and silver miners. And more excitingly, in the category Juniors for Metals, we also review some of the most promising explorers and developers that might provide that additional torque to your portfolio once miners are finally overperforming gold itself. Recently, we looked at a pretty unique developer here with an amazing potential for unlocking some value through a spin-off where the developer owns a large share of another company, and based on the market cap, the value of that share is larger than the market cap of this given developer. How crazy is that? All due to this misalignment between relatively expensive precious metals and the share prices of the miners. So for unique details like this and for much more, make sure to join us at myfinancesteacher.org. Have a great day. Bye bye.